And good afternoon, everybody, and welcome to Traders Workshop. My name is Tom Schneider, NinjaTrader, and I'll be your host for this show, Traders Workshop, where we like to present partners in our NinjaTrader ecosystem to help you as a trader determine what kind of tools or insights might help you make a better trader. So welcome to Traders Workshop. Before we get into it, I'm really excited to talk to our next guest. Before we get into it, though, we do have to do a bit of housekeeping. Just to let you know, futures, foreign currency, and options trading contains substantial risk and is not for every investor. An investor could potentially lose all or more of their initial investment. Risk capital is money that can be lost without jeopardizing your financial security or lifestyle. It doesn't push back your retirement horizon or add undue stress. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. I just want to be clear that past performance is not necessarily indicative of future results. And the information contained in this program is for educational purposes only. It's not meant to be financial advice or trading advice and shouldn't be interpreted as such. It's presented solely for educational purposes. With that bit of business out of the way, I'd really like you all to meet Adam Fiske from Boss Trading. Welcome to the show, Adam.
Tom, very happy to be here. Thank you very much for asking me to be along, and looking forward to speaking with everyone who is attending.
Yeah, this is great. Adam, before we get right into the charts, I do just want to ask you, where are you right now?
So I am in sunny, and I say that jokingly because it's 2 a.m. in the morning in Melbourne, Australia.
Oh, wow. Wow. Well, thank you for getting up. I hope you have some coffee.
Yeah, we took that one step further, a quick reach out to Uber Eats for some snakes alive and some other bits of confectionery just to keep me going along.
Excellent.
It's been a while since I've had a 2 a.m. late night. How about yourself?
I can't remember the last time I had a 2 a.m. late night. So probably involved a child being cranky, most likely. Not the fun kind of 2 a.m. So been a while for that. But I want to thank you for.
Yeah, absolutely. I'm just stoked to be here. So it's all cool.
That's great. So, just a little bit about you, Adam. I want to know how did you get into the business, and what have you done in your career to get you to this point?
Yeah, sure, Tom. So I didn't study finance at college or university. In fact, the standout subject for me when I was at high school was music. So I went on to university and studied a Bachelor of Jazz. Can you believe that?
Oh, wow.
And post that, I was pretty eager to get out into the scene, and I moved to Melbourne because it was one of the Sydney and Melbourne are the two capital cities here, and had a thriving music scene. And so I was part of an original band, and we had what they used to refer to as a distribution deal with Mushroom Records. So we did a lot of touring. It's back in the day when you go into recording studios, you'd actually record onto CD, that type of thing. But after a number of years, a lot of the guys in the band started to look at, alternate, they were starting to settle down with partners and have children, which is not conducive to touring. And I also started to think, okay, well, what's the next step? I certainly wasn't, I accepted I wasn't good enough to be like a great session drummer or anything like that to knock off the others. And that time in the studio really got me excited about gear and equipment. So long story short, I ended up in the business of home automation. Now, this is back in the day when a plasma, like a 50-inch plasma, was $25,000. So that gives you an idea of A, how old I am, and B, how long ago that was. And so the types of clients that we dealt with were some of the traders on NAB Bank's trading desk, hedge fund guys, portfolio managers, all of these types of industry facets that I just found fascinating. And so I thought, well, this is what I want to get into. I'd love hanging out with some of these clients, speaking to them, asking about their their experience. I used to do set up audio and video even in some of the trading rooms, and I just really wanted to become involved with it. And of course, the challenge to me and other retail traders is, okay, so how do you find out how to do it? And I was really just fodder for a lot of the retail type education. And through a friend of a friend, I ended up working for an ex-broker who'd set up a fund. And that was a good starting point, but I had a real thirst for knowledge. So I did all the prerequisite study and then moved into full service broking. And that was during a period where you did everything for clients and build a book. So I had, I had a portfolio of $13 million that I managed for wholesale clients across all asset classes. So options, I had all the necessary qualifications to advise on those and trade in them, and stocks and futures and FX. But one of the fascinating things about the desk is that it's a real incubator for knowledge, skills, and experience, because you're surrounded by people who are doing similar things. Plus, you've got institutional business that's being done. So you'd have a desk where people just sit there and take orders on behalf of institutions. You've got even IPO and capital raisings and things like that. And as much as I loved running funds and it was sort of longer term type investment portfolios, I really had a real interest in taking the next step, which was to, trade more for income as opposed to building longer term wealth. So that led me to end up on a prop trading desk in Melbourne, which specialized in futures, specifically in the debt market. So, your treasuries and bank bills and things like that. And where I said the full service broking environment was, really an incubator for knowledge and skills, the prop desk was like a 10 times incubator. I was working with guys that had come from the floor. One of the gentlemen that, although he was mainly based in Sydney, often came down to the Melbourne office. He's featured on one of the Chat with Traders interviews. His screen time is 60,000 hours. And you're dealing with people who'd been specializing in a very specific niche of the market for a great period of time. And so I learned an incredible amount of valuable skills from that environment, like prep for the day, right? Your game plan. We get to the office like at 6:30 a.m. in the morning, and that would be like 45 minutes to an hour of prepping, and then you'd sit around and compare notes. And just the idea of actually specializing in a very niche area of the market. So with bills, it was a lot of what they referred to as structure. So I'm sure plenty of you are familiar with some of the spreads like butterflies and condors and things like that you might see in the options market. Well, you can actually take that one step further in the interest rate market with things like double butterflies and double butterflies. So you end up with these incredibly complex type structures. And what was really illuminating to me is a lot of the big institutions actually trade those. And the rationale for it is that they remove directional risk. So they have very much a relative value approach to trading. So as an independent trader now, all of that experience, both from full service broking and then into prop trading and understanding what a lot of the other traders do, like the institutional side of it, has been an absolute godsend, if you like, in understanding how to participate. There's thousands of different ways to trade, and many of the ways that others trade aren't really applicable to retail traders simply because of the infrastructure and the cost and everything that's required to do it. But it's very important to understand how your opponents do actually participate in the market. Excuse me as I just have a drink. So that's a background of my experience in trading. And I think where this leads me to, so as a full-time trader now, I also make time to work with a handful of traders through the course of my trading. And one of the themes that I see with traders I work with, and I experience this too in broking, is that there are a lot of problems that traders face, and they seem to be very much the same sort of problems that traders have. So I thought it might be a good idea just to check in to see if everyone listening can identify with the same types of problems. Let's see if I can just bring up this slide. Just bear with me a sec.
And while we're doing that, just so you know, you can contribute questions in the YouTube chat. You can respond to the questions or the problems that Adam is posting. You can drop that in the chat as well.
So if we just go to the screen, my screen, please.
There we go. We're up there.
Okay, so this is typical of some of the problems that retail traders face. And so what I really want to do is all of that stuff about what I've done in the background. This isn't really about me. That just gives you a bit of a background as to where, I've gained some of the experience that allows me to understand how to help out those who are listening. So let me know if, 1 to 4, say, of these problems are something that you're dealing with. So your progress is too slow. Your losers are wiping out your gains. You don't have years to waste testing what works. Previous training is potentially harming your trading. You sense the market is a game, but you don't know how it's played. You can't access pro firm trading because of the barrier to entry, like it's very difficult to get into a prop firm. Or perhaps you're just overwhelmed with choices on how you can improve. So how are we going there with responses? Have we got plenty that will...
Yeah, we'll see if those populate. Real quick, Adam, just before we get into it, Jay has a question. What was your band's name? The band you were in.
It was called Alto. But you know what I did years later, until only about 5 or 6 years ago, was play in a band with my wife, which was an R&B cover band called Vanilla. So you can look that up on YouTube. You'll see live footage of us, because my playing time before that obviously predates YouTube. So there is stuff of me from like 10, 12 years ago. There's a few clips and stuff of me playing with my wife. So it was great fun. It just got to a point that I'm starting to get a little bit too senior to be able to deal with the 2 to 3 a.m. Late nights.
Right. So, Adam, why don't we focus on what you think, is the most of these issues, what you think are the most common, and see how we can address those.
Okay. So out of those problems, that really stems back to one simple explanation. And this comes back to really why I was happy to kind of go on about my background, is that trading is the ruthless profiteering at the expense of your opponent. So let me give you some examples. Paul Tudor Jones, one of the market wizards, everyone's quite familiar with him, but you may not be familiar with a documentary that was made about him called Trader. There's a few bootleg copies about, but actually trying to get hold of it is very difficult. And the reason for that is that Paul had a real concern that if other traders start to have insight into how he trades, then perhaps he'll lose his competitive edge and they can trade it against him. Another example is more recently, Bill Ackman. So there was that big short that Bill Ackman took on Herbalife. Do you remember that, Tom?
Yes, of course. Yeah.
Yeah. And so, he was even produced another documentary on why Herbalife was, should be shorted. And regardless of whether Herbalife was a Ponzi scheme or whatever else, that became very irrelevant because Carl Icahn, of course, knew what cards Bill Ackman was playing. And so he just bought up Herbalife I think he built a stake up in it of about 25%. And over the period of 5 years, Bill obviously endured quite a bit of pain, and eventually he just threw in the towel, which cost him nearly $1 billion. So there's a couple of examples of it's a very competitive environment. And so if you're a retail trader and everyone's going to keep the cards really close to their chest, how do you compete? So I've got some solutions that I use with clients that are effective and work. So one of those, and this dates back to, or it's based on my experience in prop trading, is specializing. So I'm not sure if anyone can think of someone in the Olympics who competed both in swimming and, say, the javelin. Anyone come to mind? I wouldn't think so. And that's because they specialize. And specializing in markets is one way that you can actually get an edge, a competitive edge over your competition. And that's really what you want. So I'm just going to pull up a chart here of what I trade, which is the Australian dollar. I don't trade anything else. I have 8 monitors here that I'm sitting behind, and it's all for one instrument. I just trade the one thing. So let's look at ways that we can get competitive by drilling down our focus on one instrument. So is that screen, can you see that? Oh, you can see that screen?
Yep.
You see my charts? Yep.
Yeah, they're being shared.
Okay. So this is the COT report. So there we've got.
Adam, just real quick. So for people who don't know, COT stands for Commitment of Traders.
Yeah, so that's the Commitment of Traders. Okay. Thanks, Tom.
Sure.
Now, this is actually public information, but if you go to their site, it's like in Excel format or CSV or something like this. So this is a great feature within NinjaTrader to be able to plot this data. And have a think about, I've tried to, let's see if I can hide that chart a little bit more. So we know about the increased volatility of markets that's across the board globally. So you can probably appreciate that the Australian dollar's probably sold off. But let's look at what the commercials are doing. And so think of the commercials as that group that are, with their cards close to their chest to really understand what's going on. And then look what the speculators, which is, so red's the commercials, and then you've got large and smaller speculators. Notice what's happening here with this big sell-off. And if I expand this out a bit, see what commercials are doing and what are the speculators doing. It's the complete opposite. So there are times when the distinctions between commercials and speculators is quite, like, it's not very distinctive. Like, so where I boxed it, that's a good example. But if you had to make a bet, right, that you had to make and you had to pick a side, who are you going to side with here? Commercials or speculators? Right? You're going to
pick the commercials, right?
Yeah.
Yeah.
So here's a daily chart of the Aussie dollar. And just as we're seeing see this sell-off here, that coincides with this move here. And this gets into, I'll take this a couple of steps further as we move into this. This push here, if you look at it in terms, and I'll bring up some other charts to show you the scope of the size, because this is a weekly view. But see how we've finally got commercials buying once all the speculators are finally throwing in the towel and reversing. So one of the things about specializing and finding a niche, I know that there's probably a lot of traders who really like to gravitate towards, say, the E-mini, really popular contract, one of the most highly, if not the most highly traded futures contract in the world. But my question to people is, how do you have an edge in that when it's incredibly competitive? So just if we think about FX and speculators, how are they treating this market? Are they thinking because this is a downtrend that they need to get short? This is not a stock. Doesn't an FX market behave very, very differently to, say, for example, a stock index? I mean, what does an FX market actually do? You know, who is participating in it? So think of importers and exporters and that sort of thing. That's typically the type of people that are doing a lot of the, hedging and things like that, as opposed to someone who's looking at long investing in S&Ps or the overall stock market. So that's just a slight insight to specializing. So the start of this week, we just had a change of government in Australia, and it's been a long while, but Labor is back in government. Now, historically, the Labor government doesn't have a good record with management of the economy. Now, rates and things are obviously set by you call it the central bank. We have the Reserve Bank, but there's still obviously government plays a role in the management as well. So the term that everyone's concerned about globally at the moment is inflation. So have a think about whether or not, if you've got suddenly, like, professionals see a new government that comes in that perhaps don't have the ability to manage an economy in an environment where there's a lot of potential inflation, there's then the chance that the Australian dollar will rise because rates will rise. And one of the attractions would be a carry trade, so money coming in from overseas to benefit from the interest rate differential. So I'm not sure if I've lost anyone there, but the point being is that's a unique idea that perhaps isn't something that a lot of traders are thinking about. So see how I'm developing an idea and specializing, not just looking at a bunch of charts. So my hypothesis for Monday was exactly that, which I'll show you. If anyone's got any queries about what I've mentioned, just let me know.
So actually, Adam, I'm just going to put in a couple of questions.
Go for it.
You mentioned the Labor Party just became is returned to power. What would be the other party? Are you a two-party system, or what is?
Yeah, we are a two-party, and this is the first time we've actually seen a real swing away from both parties. So people really voted this time towards independence. So both major parties saw quite a considerable drop, and so the Labor Party getting in isn't really that they won the election. It's just that they lost less than what the other party did.
Due to this independent party.
Right. Yeah, so there's a lot of independence. It's the first time it's ever happened. And if you think, gee, so now you've got, people that are really concerned about climate, things like that. So I'm not sure what's happening in the US, but people are voting with their feet on climate change in particular. So it's an interesting change. So you might, I'm not sure if you remember this, but a number of years ago, the Australian dollar went to parity. So it normally sits at about 70 to 75 cents relative to the US dollar. And again, it was the macro theme behind that was we were paying much higher interest rates in our banks, which is then reflected in the dollar than what, say, the US were in other developed nations. So money was just inflowing into that. So being aware of that, that's what made me think of it this time. I missed that big move from like 70 cents all the way up to $1.
Oh, wow.
But then I realized what had happened. And so this time round, I'm sort of on the ball with it. So if I bring up that screen there, gives you an idea of, so you can see that every day, this comes from that period of time that I've been in the markets. That experience with prop firms, we prep every day. So if I bring up my Monday.
And you save these, you have these daily observations or themes, if you will, that you catalog and you save for reference later.
Yeah, actually, that's a really good point. When you trade one instrument, you'll see themes and things start to continue through from one day to the next. So this is building your arsenal of awareness that other traders don't have. So when you specialize, Like, what's a favorite place for you to travel to, Tom?
Well, in the US, it's Arizona. I love Arizona.
Okay. Any areas overseas?
Sure, I love Ireland and
Mm-hmm.
the UK. I love the UK, and I've got family
Okay.
over there.
So if you go over to those areas, are you going to ask another tourist about a recommended restaurant, or are you going to ask a local?
Of course, a local, right?
All right. That's because they know the environment, right? So when you
Sure.
trade something every day, you're the equivalent of that person who lives in that town and knows everything else. And when you live in a town, who can you spot a mile away?
A tourist.
A tourist. So when you trade the same thing every day, you can spot, oh, wow, the Aussie dollar's gone up. Let's move into that this week. And they stand out. And so get back to that notion of the market is a competitive environment. You can absolutely pick and see, like you can pick a tourist in the market, and you can build trades around that. So it's not that I'm trying to just look for those. I've got the hypotheses, but you'll often find that the market, those that help fuel it, one's on the wrong side. So you can see here that I've taken all of these observations, right? And I'll get into this in a sec. So here's looking at some other things, which is looking at, if I just back up for a sec, the approach that I take trading is very specific and specialized. And that is, I have business, not only did I just trade the Aussie dollar, but my business is to provide liquidity to traders on the wrong side of the market. So I need to get inventory, take it on, and offer it to those who are forced to exit. Because remember, this is a competitive environment, so it's at the expense of your opponent. So when traders are exiting, if they're losing trades, I want to make a profit, which is the differential in the inventory that I've taken on and then exited out of. Does that make sense?
Sure. Yeah.
So that's my very specific business plan. So what I'm not doing is going to the market and looking for setups, right? So I have a very specific business plan, and because I'm there every day, I can see the traders who are likely to get caught. And sometimes it's really obvious. It's like spotting a tourist. So you can see in the notes here, I'm looking at inventory of where aggressive buyers are and where aggressive sellers are. So think of sport, when traders are like in sport, when the side's onside or offside, the traders who get offside, they're the ones who are likely to have to exit their trade. So that's what I'm looking for. And so a lot of what I'm doing is identifying those traders on the way. And then with working with clients, traders can watch what I do, and you can, these are some of the trades from Monday, and that they can then see all of my rationale behind them, and then it moves down to the chart. Back to that specialization, and then finding those opportunities that match that hypothesis.
And Adam, real quick, the inventories that you're seeing to help identify that, are those something that's anybody can add to their chart in NinjaTrader? Is that something that you're importing data from somewhere else? How does that work? Because the charts look real clean, right?
Yeah, so that's a great question. So I'm going to bring over another chart. Let me just get rid of the one that's on the screen there.
I'm imagining this is some sort of form of volume. Obviously, when we're talking about picking out a tourist, it's something out of line, right? Something out of whack in terms of volume and a level and how those match up. And you can pick it up, but I'm just curious to see what exactly somebody might use, right?
All right. So one of the things I love about NinjaTrader, particularly with the order flow plus tools. So I showed you the commitment of traders report. And these, of course, they're known as footprint charts. That's a trademark terms. So NinjaTrader calls them volumetric, but they're the same chart, just different names. So for every buyer, there's a seller. So it's not like there's more buying and more selling. But what we can see is those who are aggressive in the market. So generally those lifting offers are your aggressive buyers, and those hitting bids are your aggressive sellers. So just looking at that, and this is quite a big picture view, it doesn't take you terribly long to start to pick out areas where you can see traders have built positions. And what's fascinating, and so you won't see this in charts, right? Because you don't see that much information in the chart. You don't see that. But what's fascinating is that where there are areas where traders really congregate to. So if you look at this area here, they'll keep coming back to that same spot day after day, after week, after day. Now, why is that? Right. Now, this gets back to the specialization and also understanding. I mentioned relative value before, right? So there are plenty of trades that take place that are entered to at very specific prices that has nothing to do with whether or not that particular asset goes up or down. So these are what they refer to as complex structure trades. All right, so they might have, so I'll give you an example. You've got a stock, big mining stocks like BHP and Rio Tinto that are traded also, they're known as ADRs, they're also traded in the US market. So if you're trading, maybe looking for arbitrage opportunities in those stocks, they're very big stocks, so they attract a lot of interest from bigger players, then you're probably needing to also look at what you're going to do on the FX side of it, because obviously one's in US dollars and one's in Aussie, right? So there's an example of thinking about trades a little bit further out. So if you're thinking, oh, geez, all this sounds really hard, I'm just going to back up for a sec. When you're forced to look at just the one thing every day, you'd be amazed how you start to find things and question things that give you ideas that you otherwise wouldn't come up with if you're just cycling through chart after chart, after stock, after FX, this, after futures contract. Now, if you've got someone to help you and show you how they do it, that's obviously going to make the journey a lot faster. But that's all gives me an idea of where traders are positioned, and then I hypothesize about where the market is likely to move. Right? I don't predict. I've got ideas. I have to wait for the market to show me. And this is where we come back to the next area of specialization. And this is the one that is really, really important. And that's a playbook trade. So a lot of people probably have heard the term, but are wondering what a playbook trade is. Well, playbook trade is a trade that's so specific, the behaviors are so well known that it's something that when you see it, you're all over it and go for it. But the fascinating thing about a playbook trade is, I'm sure you've heard the saying, looks like a duck, smells like a duck, sounds like a duck, it's got to be a duck. What I find with working with traders is looks like playbook trade A, B, C, or whatever the name is, smells like da-da-da, but it's actually not. So think of like a Rembrandt original and a fake. There's some damn good fakes, and I couldn't pick the difference between one. It takes an absolute expert to recognize the difference. So one of the things about Ninja that I love is the fact that it's got a replay function. Because when you're developing a playbook trade, you need to get so good at identifying the nuances in it that you're not picking up the fake playbook trades. Does that make sense?
Oh, sure. Yeah. And to be clear, let's just, going back to playbook trade, the playbook trade could be almost any kind of method that you use to trade, right? It's going to be something that you as an individual trader feel comfortable with, understand, an interest and a passion and an understanding for it that I may have no interest in at all, because I have a different type of playbook trade. A playbook trade isn't something that's universal, right? The concept might be universal, or the concept might be all reaching, but the actual trade is going to be something that you are comfortable with, correct? Is that a good explanation?
Right. So what this is I mean, I love working with traders who are developing. So because I've been doing this for so long, I have a lot of playbook trades, right? Some occur more frequently than others. What I say to clients that I work with is, you're going to see a whole bunch of them, because clients watch me trade each day, because it's important to get that sort of experience, the in the field type environment. And what I find is that I don't try to direct anyone at any particular playbook trade. I mean, there's a few that I know occur more frequently and are less challenging that I will encourage them to look at, but they'll, in their efforts, so I encourage everyone to kind of like trade along with me, have a crack at it, and then nick off out of watching me trade and go into replay mode while everything's still fresh, and have a go at doing it again and again. And that's what the power of replay is, particularly when you've seen someone else do it and you've had a bit of a go and it's fresh in your mind, and now you can kind of like really fast track that learning experience. And what I find is that clients will excel in playbook trades, and they're always different from one another. So even though they're built from trades they've seen me do, because let's be honest, if you try and work one out yourself, it could take you a long, long time. So you may as well start with someone else who's already got one and then make it your own, right? Fine tune it. It's a bit like how do you want to learn golf? Do you want to go and try and, having never seen anyone play it, just swing around it? Or do you want to go and work with a professional golf coach who can show you how to swing and then watch you and give you some feedback? So that's the model that sort of I apply. But yeah, you're absolutely right. But how do we think about, people who are watching this today? How can you start to develop a playbook trade that others aren't going to see? So we've already talked about specialization and being forced to get creative, to think about things that you otherwise wouldn't have. And it happens over time. I've been doing this for a long time, so you're not going to have the same extent of ideas, just like I didn't when I started. But playbook trades aren't your edge, right? They're things that come and go. Your edge is the ability to understand the game and pick the opponents that you can compete against. There's plenty of opponents that I can't beat. Market makers, heck, I can't trade against them, but I want to be able to have the skill to recognize them. So one way that you can go about suddenly having that competitive aspect to your trading and focusing perhaps on just that one playbook trade is in the order flow tools. So I'll just get rid of this window. You've got so many useful tools. Now, when I first started broking, we used the professional platform was Iris. So it won't be well known unless you're in Australia, because it's an Australian company. But what was the main thing that stood out that everyone was using? What do you think in the institutional space, Tom, is everyone paying attention to? Institutional flow, executing perhaps orders through the course of the day. What's everyone gravitating towards?
Boy, I'm not picking this up, but I'm going to say price behavior and who's behind the orders, right? Bids and asks. I don't know. I'm just pulling it out.
Look, 8 out of 10 for having crack. So VWAP.
Sure. Okay.
VWAP. Very good. Yep. So you think in the old days, guys actually sat there and executed. And the way that you got evaluated on your ability to move an order was its relationship to VWAP. VWAP is huge still, enormous. Sure. Like, it is incredible. But now what a lot of the broking firms do is, like, it's not full service anymore. It's they go to a fund and they say, hey, listen, you don't need to worry about investing in the infrastructure to have an algo to do that. We've got that. Come to us and we'll do it for you. But then there's different variations of VWAP. So as an example, let me see if I can pick up a chart.
So just for everybody who's viewing, VWAP is short for volume weighted average price, and generally it is more reflective of the prices that move the market or that represent where trading occurs based on the volume of the trades that happened at that price.
Yeah, absolutely. So I'm going to show you a VWAP based on the US market. Right? So I should say FX trades like 23 hours a day. Mm-hmm. Let's look at VWAP just for this is just for the US, and then we'll also look at the full VWAP as well. So let's go across here, bring this over.
And to be clear, you know, when Adam refers to VWAP as being a bellwether, a benchmark to be graded against, as a buyer, you want to be under VWAP. You want to get a better price than VWAP, and as a seller, you want to be above VWAP. How much above VWAP was your trade? You know, if you're selling.
Yeah, absolutely. Thanks for adding that, Tom. So we've got some volume profiles. Volume profile, you know, the simplest way to think of it is, okay, it's just showing you where a lot of the business is done. All right, so have a look. This is the highest volume node that you can see here. So this is live data. This is 100 tick chart of the 6A, which is the Australian futures against the US dollar trades on the CME. All right, so that's right at VWAP, which is CME's VWAP. Yeah.
Okay.
There's nothing much incredibly happening there that we can look at. See how VWAP has anchored the market through the Asian session, and then through the US session, it's giving it up. Here it is early in the session. This is all Asia and Europe. And see how the relationship changes, and we can keep going on, you know, back and forth, looking at the different relationships between the different markets. So some of the tools so one way you can approach finding those specialist trades is to use multiple points of evidence, is what I refer to. I should mention on the Boss Trading site, you can actually see a whole bunch of videos that will show you trading with basically an edge using an approach that most traders don't know about. Because remember, you want to have an advantage over those that don't even know what's about to hit them.
Right.
But look at the look at the deviations. See that? It's incredible.
So we're looking at, just to be clear, we're looking at the VWAP as an anchor, right? And it could be mean reverting. It could be support and resistance. Some days, like yesterday, it looked like it was support most of the day. Closer to today, it looks like we were trading around it. And then within the deviations, you see levels in there that also could act as support and resistance, is what am I interpreting that correctly?
Yeah, so you'll often find that so there's that day where it's anchoring to the upside. Yep. Right? So you'd be mad trying to short that market with a rising VWAP.
Sure.
Now I say VWAP because I'm in Australia, and I know because it's spelt VWAP, and a lot of the Americans say VWAP.
Right.
But I'm going to stick to VWAP. All right, so this is just one tool. So what I want to show you here, so here is CME VWAP, right? Mm. But here is the US session, right? So this is just the US session here. See right. How this is the first deviation acting as an anchor to the downside, which most traders would not be aware of.
Right. Right.
So that you'll find that traders that will try to fade this, right? So, oh, here's a move to the upside. And you can see, maybe it's now go, who cares? The fact is that's a robust, this is a 100 tick chart. So and there it is again. See it here?
Sure, sure.
So there's a couple of periods. Now, what's that? That's lunch, right? So you can divide the day up into certain time frames. What else can we do? I'll tell you something else that is fascinating. The depth map. Again, this is from the order flow tools. Now, I'm not going into the specifics of VWAP or anything like that. I'm just showing you that you can layer and layer and layer and put all of these things together, because you have to think of your competitors. Maybe they're just looking at a chart and there's a level that you know about, but maybe what you're not seeing is VWAP or the second deviation, or, you know, that hypothesis about what I was talking about with, the potential move to the upside, or that there's a whole bunch of sellers who are actually offside in the market. So we get back to these structures, right? Talking about where it's not so much about whether or not the market has to go up or down for them to make money. It's about, to complete that structure. It's like a really complex, think of an options or a spread trade, but lots of spreads, that they need to execute at really specific levels. So you'll often find these resting liquidity orders. Now, you're thinking, well, hang on a minute, don't you want to keep your cards close to your chest? Why are you advertising these orders? Because it's about queue priority. You have to get in the queue if you want to get exercised at that price, because you need to get exercised at that price for your whole structure to work. So it's not about the individual leg, it's about how it fits in with everything else. If you're a market maker and you see liquidity, or even if you're a bigger player and you see resting orders, what do you want to know? Hey, if we go to that level, can the market wipe through it and keep going? Or is that going to fail?
Right.
So there's another thing that you can. Quite often you can, so I trade the Asian session. So this is my sleep time right now, but that's another component that you can start to incorporate. See how we're starting to add level upon level on level?
Yes.
Was that Sarah Lee, a layer upon layer upon layer? It's
Right.
the same deal. Right, so let's look at something else then.
Adam, unfortunately, we're running up against time.
Okay.
I'm like you, I think. I could talk about this all day. What I'd like to do, though, is I'd like you to tell people how they can reach out to you and where they can find out more information about what you do, and continue along these lines on these topics.
Certainly. So what I have done is, for me, coming from the inside, if you like, and then seeing, and I remember I went through being a retail trader and having to go through the whole fiasco of going into broking and then into prop trading to find out how to play the game. So if someone comes to me and says they're a new trader and they don't have that background, or even if they're a retail trader who's had a period of struggling, right? There's many people who've done that. Then I offer a solution to get them to the live market in a much shorter period of time than what it typically takes. So, for example, the last client I worked with, who you can see it there, in 9 months was able to walk away from full-time trading, his previous career. The reason why it's effective is because I use the example of the golf coach. If you can work with someone who can show you what to do, so you get hands-on experience, like in the field, but then they can give you constant feedback, not just once, but I do this over a period of 33 weeks, one-on-one with a client. And every day they also get to see me trade to try to emulate it and then build their own, practice building their own skills. So that's a relationship which is very much like a professional golf player and their professional coach. So it's nearly 12 months of a program to take you to live trading. So when it's done properly, trading is a high income skill. A lot of people consider other alternatives, being a doctor, being a lawyer, whatever it might be. So what I do is give you a high income skill in a quarter of the time and at half the cost of a tertiary qualification. Trading's not for everyone. You have to be competitive. You need to have a growth mindset. But what I've found is that those who, I don't think you need to be special to trade, but it's certainly a huge advantage to be able to work with someone who can actually direct you in the right way so you don't waste time, and importantly, identify every little bit of area all through your progress so you can move very quickly. So the one thing I do as a promise is, you know, you have your first playbook trade ready to go live week 5, right? What's good about that? You remain motivated. You keep wanting to trade because you're already seeing success. It's only one trade, so the rest of the time you're still working on other ones. So you've got one that's live, and then you're in the market working on the next one, right? Back into sim. So you're swapping between the two. It also overcomes that problem of trade in sim for God knows how long, and then suddenly go to live, and it's like, whoa! So better to do it step by step, a bit like the gym. So right. All of this is at my site. If it's bosstrading.com.au, boss being the market's in charge, you do what the market says. So it's about learning to understand what the market says and be told that way. Now, the one thing I would recommend is if there's some things that you think, gee, there's probably some ideas that I could benefit from. If you pop along to the site, you can join the week free lesson, which is once a week via email. You won't get anything else from me. You're not going to get bombarded with stuff, but it is taking a lot of the concepts that are effective in trading and giving you a chance to understand them in greater detail and ideally benefit your trading.
Awesome. Well, thank you so much, Adam. Thanks for getting up early and sharing your wisdom with us, your experience. We really appreciate it, and hope to see you again, in the coming weeks and months, back again on Traders Workshop. It's been a pleasure to have you on here, Adam.
Look, I very much appreciate it, and thanks to those who've hung around to watch as well.
Yes, and thanks everybody for coming and joining the conversation. And I'll leave you with some good words. Be safe and be nice to each other, and have a great trading day. Thank you very much for coming.